Good morning, good afternoon, and good evening to you all out there, the Smoking Barrel Nation. I'm Rustin Edwards, based in Geneva, and with my illustrious co-host, based in sunny, boiling hot Dubai, Mr. Matt Stanley.
Yeah, morning. This is my smoking barrel dance. The only time that I do this dance is when we start the podcast, so I think it's like a nervous tick or something. But
You know,
yeah,
the boxer getting ready to jump in the ring, getting ready.
yeah, no, it's weird. It was weird. I played. No, I didn't. I was in a meeting early yesterday morning in the outdoors for about 3.5 hours, and it was raining.
In
It,
Dubai.
in Dubai, and the last decade of May, it was nice. It was like having a hot shower. But that usually signals that the hot season is upon us. I mean, it's not crept up on us gently. It went from like 32, 34 to 45, 46, and loads of humidity and dust and wind. So that we got that for the next 3 months. But it's that's fine. Shut the windows. Don't see anyone. Turn into a hibernating beaver, and I'll see you in September.
Crawl into the cave, grow that beard a little bit longer.
Yeah, be down here, be like a Viking.
Old man Winkle. Well, what we got going on? We got crude markets trading roughly around 75, 77. We've got Brent has been in a well-established rut probably for the last 3 weeks now between 74.50 and 77.50 based on what I got on my chart, which is kind of an amazing feat considering what you can say is a lot of bullish impetus in the market, yet the market can't seem to break out of the range.
Yeah, I agree with you. I mean, yeah, for the last 2 weeks, it's been fairly range bound. I mean, not boring days though. The markets are still fraught with volatility as they should be. You know, amount of money that's moving in and out of oil every day. You know, it's a huge marketplace. But yeah, essentially, it's been fairly narrow. You know, we compared it to a month ago. We were up in the between 80 and 85, and then 2 weeks later we were down in the low 70s. So I don't know. It just keeps on finding a kind of comfort level, and it's never an odd number. It's always like when you're pulling your lottery numbers out, it always has to be something that makes sense for them at 72.50 or 75 or 77.50 or 80. It just moves in those kind of $2.5 ranges. But look, looking at and sort of breaking that down, what it means on sentiment, is it bullish or a bear? I think it's fairly balanced, mate. To be honest, I think. You read, depends what side of the bed you wake up on and what newspaper you want to read or news feed. On one hand, you could say things are looking bearish because of pressure on, recessionary pressures. And on the one hand, you could say, well, supply is looking tight with locations down across the globe or OPEC cuts, whatever the impetus may be. But I'd say in essence, it's fairly well balanced right now.
Yeah, I would tend to agree because if you even look at just the macro supply situation, we've had roughly 700,000 barrels a day off the market for the last 2 weeks. You've got the Canadian oil sands up in Alberta shut in because of the forest fires, which is taking about 300 to 325,000 barrels a day of heavy crude off the market. And then you've got the Kirkuk issue still there, where Turkey and Iraq have yet to agree on reopening the Seyhan pipeline. That's taken another 400,000 barrels off the market.
Yeah.
Now, granted, this is all heavy sour crudes, which should imply that your high sulfur fuel market should be screaming. Yet that seems to be also be fairly subdued because of lack of buying interest yet from the utility demand in the Middle East. And it seems like the Chinese buying for teapots for bitumen mix seems to have dried up for a bit, and they've become offers in the market in the East. So it's a bit of a strange combination of things. Yet with the curtailment of the supply and the forward projections of demand that everybody seems to be sitting on, especially with the IEA and OPEC out with their incremental growth of demand in the Far East, it's hard to believe that this market can't get above $77.
Yeah, I mean, I think the interesting point there is, and I think a lot of people will look at this as a transitory year in terms of historical market factors, like you mentioned there, high sulfur fuel oil market. It's freaking hot in the Middle East. Usually we buy a lot of fuel oil to burn for air conditioning use. Now, trust me, the Middle East is buzzing. Demand is there. Is it that the historical market signals that you see, i.e. draws from the Med or draws from Russia, obviously, where that product came from, is it just that trade patterns have changed and the market just isn't seeing those same signals it was used to. I don't see a fundamental shift in demand. It's still there, but is it as transparent as it used to be to provide that same signal to the market this year as it has been for previous years?
Well, I think the transparency has probably been muted or blurred just because of the Russian oil and dark fleet. How much Russian fuel oil is actually moving into the Middle East, satisfying the demand for utility burn, and how much Russian fuel is actually going into China to satisfy the demand of the bitumen mix demand into China. And I don't think anybody can get a clear cut explanation of how those sit because it's opaque. I mean, it's called the dark fleet for a reason.
Yeah. Yeah. If only there was some kind of commodity data trading system that one could log in at that would provide all this clarity. Hang on a minute. Hang on. I might have it.
There was a tracking system to track these vessels.
Yeah. Okay. The dark fleet. I agree. Okay. If we're looking at Middle East monthly imports from Russia, we can split it by fuel oils. But just in terms of in the prism of this conversation, let's look at it from that trading pattern compared, i.e., from Russia in the Middle East, which is fraught with issue. EU and US sanctions, not a UN sanction. So the Middle East there's nothing wrong here. Again, our weekly and my usual diatribe. Let's look at it on a year-on-year basis. May 2022, the Middle East imported, and this is across the barrel, from clean condensate to fuel oil to straight run fuel to gasoline, everything, 9.7 million barrels of product from Russia. May 2023, and it isn't over yet, 28.2 million barrels, right? So it's clear a 300% increase in imports. But I tell you this, if the majority of that is moving via a dark fleet, grey fleet, whatever fleet you like, mummy, it doesn't matter. The barrels are moving, but the same signals are not there as they have been in the past. So as usual, you've always said, oil will move, patterns will emerge, but are the traders looking at the right kind of patterns to establish what's actually happening in market dynamics? I don't think they are.
Well, when you say that you have that type of increase in material coming into the Middle East, that has to displace something. It's not like it just goes into a black hole and vanishes. And because the Middle East has also the home of a very large refining sector. And so what you probably are seeing then is a conversely flip of exports from the Middle East into Europe to counterbalance the flow coming in from Russia.
Yeah. Yeah. I mean, look, and this is something that I wanted to touch on with you because this shift in trading patterns, it's clearly there and we're writing about it. I don't think people know that they want to read about it or they are aware. Of course, they're aware of it. There just seems to be, and perhaps this is why, going back to the original, why is Brent stuck in a range? I just don't think people have got it clear in their mind. And because they don't have it clear in their mind, i.e. how trading patterns have shifted, have the whole desk agreed? Is there a unilateral agreement that is going to be the new, status quo? And I just think people are not then putting positions down, which is netting back to the Brent market because it is in a narrow range.
Yeah, and again, the structure of the Brent market's not showing a very tight supply situation. You've got 14 cent structure between M1, M2, M2, M3 around 33 cents. So it's not showing massive backwardation, which shows that there's a real shortfall of material. And I think as the market has rebalanced around the different trade flows and the different demand centers are taking from different supply centers now, it is creating a different picture that, the market is, as you said earlier, fairly well balanced and we're not really short, we're not really long.
Yeah. Yeah, I think you're right. I mean, look, this week, Dubai is hosting a conference. Of course it is. Every week there is a conference Dubai is hosting. The world wants to be here and they are here. It's MPGC, which is the Middle East Petroleum and Gas Conference. 30 years, it's been going a long time, usually split between here and Bahrain. S&P Global Platts, everyone knows them and loves them. They are hosting it now. They bought the rights from Conference Connections. And yesterday, the OPEC, the ex-Secretary General, Al Gaith from Kuwait, he made the opening remarks. Of course, it's something that needs to be discussed. He's mentioned that the lack of energy investment in the energy sector is going to cause volatility in prices going forward. So there needs to be this holding. The rhetoric is not breaking news, but it's something that needs to be aired. Something that you and I have spoken about on this podcast in the past, previously, has been that is something that needs to be addressed. So it's not breaking news. The one story that came out of yesterday's MPGC first day conference was what the head of IOC, the Indian Oil Corporation, said. So I'm going to quote here from the Gulf News. He said, spot purchases from the region, i.e. the Middle East, have fallen due to increased Russian crude oil imports. He said, quote, the purchase from the Middle East continues to remain as it is, as the term contracts, whatever we have lined up, are absolutely in place. But spot purchases have gone down because somewhat there has to be a dip to accommodate the Russian oil that we are buying. Now, if that's not a clear and stark warning to pretty much every single OPEC minister, energy minister who was in that room yesterday in Dubai, that they are now competing with Russia, and India is one of the, it's got to be. I mean, it's always Saudi and Iraq's biggest customers. I read last week that India paid Iraq around $35 billion for its oil last year and paid the Russians about $34 billion. So there's a clear change in agenda, and it's not, this is all above, no one's circumventing sanctions here. This, again, moral compass question. But it's something that I think is becoming more and more, I wouldn't say of an issue, but something will have to happen, because will India and China be the only outlets for Russian energy going forward?
Well, I think it's more than just India and China. I think it's the rest of the world that's not under the US EU umbrella. I mean, you've got, Africa buying a fair amount of Russian energy. You've got Latin America, South America buying Russian energy. So it's not a case of just India and China. India and China are the big headline ones because they're taking the majority of the Russian crude that's been displaced out of the EU. But nevertheless, all the other products are finding homes in other marketplaces. I mean, it just says that, it is going to come down to, within OPEC, an argument around market share. As how much market share is OPEC core willing to give up to Russia? And that's that, because Russia is not part of OPEC. It's part of OPEC plus, but OPEC is OPEC. And if OPEC is losing market share to Russia because Russia is underpricing everything that OPEC can produce, because it just comes down to the basic economics.
I know.
Russia's cut of 500,000 barrels seems not to have materialized yet. So was that just all window dressing and talk, just to spur the market higher? Yet they're taking advantage of it as much as they can.
Well, someone call that market management.
Yes.
No, but look, we need a little. Yeah, exactly. We need a little bell when I pull out a stat. So I just want to pull out a stat based on that paragraph that I quoted from the Gulf News around Indian imports of Russian energy. May 2021, right, 2 years ago. See, my maths is good. India imported across everything: crude, fuel oil, gasoline, naphtha, 5.6 million barrels of products from Russia.
That's
May
the entire year, correct?
Sorry?
That's the entire year number.
No, that's May 2021, the month of May. That's 5.6 million barrels in May 2021 of every, across the barrel, crude, condensate, everything. In May 2023, it was 79.9 million barrels, and it's growing. So you can clearly see, what is happening. And, there's two things here I wanted to talk to you about. One is what happens with further sanctions within the EU. Do they ban refined oil purchases from India based on the fact the EU believes it's sourced from Russian crude, burnt from Russian crude? That one is probably rhetoric. The second one was we had the G7 last week in Tokyo. Now, India and China are famously not part of G7, even though they're the second and third biggest economies in the world. Certainly the first and second most populous countries in the world. I think that Modi he was invited, and the first question that he was asked was, why are you still buying Russian energy?
Because I've got 1.4 billion people and the energy's cheap. Pretty straightforward answer. I don't think there's any other reason why you can say why you're buying it. I think the rhetorical question on will the EU start banning product produced from Russian crude? Yeah, if they want to do that, watch inflation go up 25%, 30%, because all your energy prices will spike. I
Yeah,
mean,
but
the
they
question
came that.
the question
Sorry, go on.
around that one has everything to do with, oh, the Spanish refineries can't compete with this cheap gas oil that's coming
Yeah,
in.
said last week.
I
Yeah,
mean,
yeah.
it is purely a political statement to support the refining industry inside of Spain. That's how I see it. You can debate that if you want. You can comment on that if you want in our comment section, but that's what I look at it. So nevertheless, if they did that, if they put those bans in, if they try to create that type of ban, saying, okay, we want proof of what crude produced this oil. Well, are you going to apply that also to Saudi Arabia, UAE, Kuwait, Iraq?
Yeah. No, I know. And look, the EU famous. Yeah, I know exactly. The EU, what they did was saying, we will further tighten sanctions on Russian energy, but don't worry, it won't create a spike on energy prices, or will there be a supply? Okay, thanks, Sherlock. So what's your actual plan then? Are you just saying stuff?
If you saw what they came out with the G7, they were actually looking at putting more sanctions on service sector around oil production, and they hit a few different companies that were in Russia with more sanctions around oil field development, oil field refining
Mm.
technology, things along those lines. So they did something that, yes, you can't trade with them, but we're going to sanction them. So if you're China trying to trade with them, you won't be able to use US dollars anymore to make those transactions happen.
Yeah. Yeah, look, I mean, I think what you're doing is the market. I read something as well the other day on Ship and Bunker, which is a fairly niche magazine or website, but it's very good in terms of the maritime space. The majority of people who are reading or watching, listening, whatever, for us, it's very useful. And there was an article someone sent the other day. Excuse me, I haven't got it in front of me now, but it was about enforcement of Russian bunker fuel within the maritime sector. Will that be clamped down on? And where will it be clamped down on, and how? And I just think you're getting it's becoming a little bit convoluted now. And I'm just not sure how much further the sanctions can go. Probably they can, I don't know, but I don't know. It's one everyone's waiting for. And again, I think evidence is why things are range bound on crude prices.
Well, and if we want to start looking at overall demand, I mean, one of the most interesting things I was reading here recently was around EV penetration, electric vehicles, because to segue out of crude oil markets into product markets, EV penetration on a global basis, 18-20% of all new sales are EVs.
Yeah.
Which, when you think of that from a demand profile, I mean, that's got to be dramatically impacting gasoline demand across the globe. China, biggest growth market for EVs. On a whole percentage basis, it's not a big percentage yet. But as more and more EVs are sold, it does create a interesting conundrum on what is forward energy demand for gasoline going to look like as more EVs come into use. I mean, I'm going to admit I have a Tesla. That's not product.
I mean, viewers, the irony, the hypocrisy of the boy moaning about it. Power demand.
I'm just doing my part to hurt gasoline demand.
And he's driving something that's friendly to dolphins. It's just not right. Anyway, but okay, look, the cynic in me, if you're an electric vehicles, Musk was in the news this morning. He needs to readjust his price points because of the competition. Places like China, their export of EVs is extraordinary. Musk did something very well. He was first to market, and now what he's got to do is readjust his overall policy to keep up with the competition. Look, if you're the old man out in me, where are people in China getting their electricity from? Cheap Russian coal, probably, right? So it's a hell of a lot cheaper than it is to import or have Hengli or whoever other Chinese refiners are available sell you gasoline wherever you might be. You go with the cheapest thing. So I think that people are looking at that. I think that's a different argument. And I agree with you that the gasoline market in the more mature areas, the established areas, Gulf Coast perhaps, but they do like a V8 or two. Europe, especially, look at you're buying the EV. I think that people are going to look at buying more and more. You know, you can't get a taxi now in London unless it's a hybrid. But within the Middle East, demand is, I mean, like I said, Tesla is a last year in Dubai, or the UAE in total, sorry, there were 10 million vehicles sold, 4,000 of which were electric vehicles. So it is nothing. Here it's nothing. People, the appetite is still here because energy prices are cheap. We love a big combustion engine here. So I think that that's a fracturing argument when it comes to electric vehicles in the more mature markets.
Well, I mean, it is a case that, okay, you have to have the regulation in there to also spur it on, because when you think about it, you know, the EU has their internal combustion engine ban that's going to be coming into place for new car sales in 2030 and 2035, depending on what country you're in. And therefore, if you're looking at buying a new car today, you know, do you go out and buy an ICE engine, knowing that at some point your tax base will probably go up and your registration fees will probably go up over the next 5 years? Or do you bite the bullet and buy the EV now to get in before everybody else jumps into it? And so it is a case, I think that transition is happening because it is a change in consumer sentiment around the regulations that have been put in place. And I think that's the only reason why you're seeing this growth in EV purchases that is happening across the globe, is that people are looking at this saying, in the 5-year time horizon, would I rather be sitting on a S-Class Mercedes that I might have to sell at an extreme discount to get rid of it? Or do I get rid of it today where there's still demand for that car and transition into an EV, which will have a better resale value 5 years down the road?
Or do you keep that S-Class as a classic because in 20 years' time, the world's going to be screaming for gasoline again?
Could be.
What side of that coin do you sit, viewers? Let us know.
But nevertheless, it does paint into a picture of, you know, how is that going to impact demand? I mean, IEA had a number out that, you know, 700,000 barrels a day of gasoline demand has been pulled off the global market because of EV penetration. Mm-hmm. They expect that to grow to 5 million barrels a day of demand, which translates into 10 million less crude runs, all things being equal, just because every time you run a barrel of crude, you have to produce a percentage of gasoline and a percentage of distillate. And it's usually right around 42, 43% of one and 42 to 44% of the other.
Yeah, I agree with that. And look, and to balance this argument out, because we are a balanced podcast, viewers, you know, the rhetoric that was coming out of MPGC yesterday was, like I said earlier, Al Gaith, energy investment isn't there in a population that is going to grow over the next few years. So I'd argue that what the oil market will lose out to EV demand, which I still think is fairly negligible, regardless of the IEA's forecasts. I think that the growth in global population will fuel and balance out that demand argument. I can't see, you know, well, it's where population will grow. I agree. EU, I think, will be poor for oil demand over the next 10, 20 years. It doesn't have a choice. But East Africa, Latin America, Southeast Asia, West Africa, all these places, they're a growing middle class, and that's only going to spur on oil demand. So I think it just shifts into other areas.
Well, I think you're thinking of it as an old man at that point, because I think as we look at the new population that's coming in, they're far more, you know, I think even in Asia, they're far more attuned to doing what's right and not just be wasteful about how they use energy. So I think what you'll see is in the new generation, as they come in, as the population grows, they're going to be more conscious about how they use energy, what type of energy they're using. Therefore, I think EVs will probably have a much larger percentage, and, you know, gasoline demand will continue to drop lower and lower and lower as younger people come in to buy.
Okay, let me put it to you this way then, old man. Cheap. Most people's first cars are usually a hand-me-down from their parents, right? Mine was a Ford Escort in deep plum. That was the color. It was fabulous. My mum used to drive it. It was great. And it worked because it was a combustion engine. If you wanted to do something on the engine, you got dirty and you sorted something out. I mean, I didn't, but you know, that generation before me did. What are you going to do when the car you're handing down to your girls is a Tesla that needs an $80,000 battery replacement?
Who says you're going to be handing down a Tesla at that point? Who says car ownership is going to become where you?
Oh God! So you're predicting the death of the car now as well?
No. I'm predicting a change in sentiment around how people operate vehicles.
If you say e-scooters, I'm gonna resign from this podcast.
Well, e-scooters, cars, it all runs the same. I mean, I think
Yeah.
the thing
Yeah.
that
All right. Yeah. 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 Yeah.
to
Moving on from Teslas, gone.
and the EV debate, because we could probably have a very long conversation around EVs, the pluses and the minuses. One thing that kind of struck me as interesting was the fact was pasta prices, which the inflation argument is still out there. I mean, we've had a lot of commentary from the EU, ECB. We've had commentary from Fed presidents about rates are not going to go down. They might still go up in the United States, or there might be a pause in June, but don't expect to go lower.
Yeah.
Italian pasta prices up 17% in March and up 16% more in April. And this is causing a bit of unrest within Italy, which has spurred on a government ministerial meeting, and as well as a call for a general strike because the price of pasta is escalating.
I'm going to leave any stereotypical jokes on the table here, okay? There are
It,
loads.
it is an interesting subcase, though, of the cost of living increase and how it's still percolating underneath the market. Because pasta is a basic food. It's like bread in France. I mean, I think if the price of a baguette doubled in France, you'd have France go on a strike again. Pasta has always been it's the substitution for bread in a lot of places because it's long shelf life, and the basic ingredient is wheat, flour, egg maybe, and water and salt.
Yeah.
So those are your basic
cooking show as well, people.
Hey, yeah, we can do it all here in the smoking barrel. But the fact that your pasta prices are escalating up like that, it does impact the consumer. And it does just show that there's still this underlying inflation that is still pricing into the market, brought on by the Ukrainian war, as well as just the downward effects of the pandemic. And so they haven't gone away. They're still kind of percolating underneath the surface. But I just thought that was a very interesting data point out this morning.
Yeah, no, I agree with you. And look, it's another one where trade patterns are changing. I mean, we have the ability, fortunately, we also have a dry terminal in Kepler. I mean, we imports into Italy. Historically, Russia have always been, big suppliers. But now you've got, Canada, France are not doing as much. Yeah, look, I mean, it's a story that's resonating across the world. The cost of living crisis was somewhat of a dramatic title that the Daily Mail gave it all, but it will affect everyone. I mean, here in the Middle East, I know that we're sheltered from a lot of that stuff, but the price of eggs and poultry in general, that's gone up 50%.
If you have eggs,
I mean, you said the other week about was it your brother-in-law or brother was saying prices have gone up so much in California. Well, it's happened here as well, and in an environment and an economy that is largely expat, that does have an effect on people. So look, wheat, pasta, flour, yeast, sugar, salt, whatever you want to make, you make your bread or your pasta. Yeah, look, all of it is going up.
Well, and as you have that increase in interest rates, especially as you tie that back to what's going on with the central banks raising interest rates or maintaining high interest rates, the cost of all that trade starts to go up as well because your trade finance cost goes up on an exponential curve. I mean, when you think about it, that 2 years ago to finance a cargo of oil might have been 4.5% annual. You're now at 10 to 11% because LIBOR has gone up so much.
Yeah.
And people usually are trading, trade finance usually done at a premium to LIBOR.
Yeah.
LIBOR, the London interbank exchange rate for interest.
Offered rate, yeah.
And so therefore, all that cost is still percolating in through the supply chains and will start showing up in all your commodity flows, which will then translate into products down the road. And that type of finance change and that type of financing impact takes a good 6-7 months to actually show up in the actual cost of goods. And so what this article, at least to me, says is that the high cost of financing those grain imports is now starting to come in and start to impact the price of the cost of the food.
Yeah, and it's one that we've got to keep an eye on because it's all about the end user demand. Yeah, I think That's a good point to raise, mate.
But that also kind of leads into the last point is that, the biggest piece of volatility that's probably in the market today is the United States debt ceiling crisis.
Yeah. Now, look, I'm going to talk on behalf of everyone else in the world, right? What is it? Like, I mean, Biden's in like having a meeting with someone, and then you haven't got enough money. You've got to run out of cash. I mean, maybe it's just me, probably, but why? What? Go on, explain this. Go on, give us a 101 on
U.S.
this.
constitutional government 101.
Hang on.
Government is split into 3 branches. Yeah, okay, then Mr. Stanley's off, and there you go.
Sorry. I just went.
We have a bit of action on the show as well. It's like, can Matt keep his head up?
Go on. I'll staple it to this.
You have the executive branch, which runs the government. You have the legislative branch, which writes the rules and controls the purse strings. And you have the judicial branch, which then judges on the different definitions of law and how they function and how they're interpreted to impact the general population. So in this scheme of everything, the U.S. Congress controls the purse strings that the U.S. government has in order to spend money. In that, they establish a budget. And in that budget, they say how much money can the U.S. government actually borrow to finance all the debt service that it has to finance to maintain the current federal government spending levels. So every year, the debt ceiling is something that gets adjusted based on inflation, based on how much spending needs to be done and how much debt has to be serviced. In the United States, the current debt ceiling is roughly around $31.8 trillion.
That's a lot in it.
Trillion, yes.
I have
no idea how that is ever going to get paid off, if it ever will ever get paid off. I think it's something that my great-great-great-grandchildren might have to think about at some point as they get to my age. But nevertheless, it's a huge sum of money that has to be done.
It's like an overdraft.
It is an overdraft. And so basically the U.S. Congress has to appropriate more money or more allowance to the U.S. federal executive branch to borrow in order to maintain the payments of all the bills that have to be paid across the entire department structure of the U.S. government. And what has happened here recently, and it's not new, this is a argument that started way back in the Clinton administration, is that when you have 2 different parties in power, the one party can use the debt ceiling as a cudgel over the executive branch to get what they want. And so what we're seeing here, a cudgel, a beating stick, i.e., if you don't do it, if you don't sign this law, we're not going to raise the debt ceiling. Therefore, you have to shut down the government. And all of your plans and all your projects and all of the services you provide will go to zero. You will not have money to run that.
Big cudgel. Yeah.
It happened during the Clinton administration. It happened during the Obama administration, and it's happening again now versus the Biden administration. This is where the Republicans take control of the Congress. In the House of Representatives, they're the ones that can write and draft the bills around how money is spent. And they have basically told the Biden administration that if you don't cut back on your spending, we're not going to give you any more money. So we've come now to the impasse where the Treasury Secretary says that the government will run out of money sometime between June 1st and June 6th. And the U.S. House of Representatives have yet to put together a comprehensive package which everybody can agree on in order to raise the debt ceiling to a point which will allow the government to function for another year, maybe 2 years.
When you ask someone a question, you're like, I really wish I hadn't asked this. But then you've got to carry on. But no, sorry, a very good explanation. Still, yeah, okay.
And so that's what you have now. You now have the head of the Republican Party in the House of Representatives, the Speaker of the House, McCarthy, and the President of the United States having daily discussions in order to try to see if they can come up with a compromise that will allow the Republicans to write a bill, which will then get passed through the House, has to pass the Senate to reach Joe Biden to sign in order to raise the debt ceiling up to whatever level they want to raise it in order to maintain the current spending levels or increase spending levels of the U.S. government.
Okay.
So even if they come to an agreement, you still have to get the entire Congress to vote on it. And when you look at the levels of how the Congress sits currently, you've got 16 people, I believe, 16 seats that are majority for the Republican Party in the House of Representatives, bicameral legislative. You've got a 1-seat majority in the U.S. Senate, which favors the Democrats. And so if you get any defection on either side of those, you can end up, even with an idea that we have an agreement, it goes to vote and the vote doesn't pass. And which
Okay.
the entire financial system of the United States into turmoil.
Well, let's hope not. I mean, yeah. I mean, look, thanks, Russ, for that. That's extraordinary. Yeah.
Well,
that's what I have to say about that.
So we've got that. So later on the week, we'll see what the information of the EIA has to say around gasoline demand as we're going into the Memorial Day weekend.
Yeah.
This is
Monday days. Yeah.
Yep. Next Monday is Labor Day. So we got that holiday popping up. OPEC meeting in 2 weeks, and they say Bob's your uncle.
Robert's your father's brother. Yes. Yeah, sorry, I feel like I've just been asleep with my eyes open for the last 5 minutes, viewers, but I haven't. That was a very good explanation. I will rewatch it several times and still go, not a clue how US politics works. But, like you said, I'm an old man. Why would I care? All right, look, thanks to everyone for watching and stuff recently. We really, all the feedback and questions, and keep on liking, commenting, subscribing. LinkedIn, check us out there, check out our page. And we've got some more exciting content coming soon. So we'll keep it coming if you want us to.
Thank you all. And another brilliant shout out to Irene, our producer.
Yeah.
Australia.
Much love.
Much love to her. And, thank you for all your help and all your support. And we'll look forward to talking to you all next week. Have a good one.
Yeah.